Hello traders and welcome back to the Forex Geek. In today's video we'll explore the bearish inverted hammer, which is a powerful candlestick pattern that can significantly impact your trading decisions. So this pattern, often overlooked by novice traders, holds valuable insights into market sentiment and potential trend continuations. Understanding how to identify and interpret the bearish inverted hammer can give you a competitive edge in Forex trading. So stay tuned until the end to learn how to effectively incorporate this pattern into your trading strategy and potentially improve your trading decisions. So without wasting much of your time, let's get started. So first, what is the inverted hammer candlestick pattern? So the inverted hammer candlestick pattern is a single candle formation that occurs during a downtrend. It is characterized by a small body at the lower end of the trading range with a longer upper shadow and little to no lower shadow. Shadow here means weak. You can call it weak or you can call it shadow. So this pattern suggests that buyers attempted to push price upwards. Let me just use the arrow to illustrate. Buyers attempted to push price upwards and during the trading session, but we are ultimately overpowered by sellers. So buyers tried to push price all the way upwards, but sellers stepped in and pushed price lower, closing around here, the lower part of the trading session, and it could go as low as this. Oh, this is big enough. So this is how it looks. This is the inverted hammer candlestick pattern. So it could either be bearish or bullish. So to identify an inverted hammer, look out for these key features or characteristics. First, a small real body. Open and close are close together. The open of the candle and the close of the candle are close together. So a longer upper shadow or wick, which is this, a longer upper shadow or wick, typically at least twice the length of the body, and little to no lower shadow or wick. So this pattern forms after a downtrend or during a downtrend. Is used for continuations. So the inverted hammer can be either bullish or bearish depending on the context and subsequent price action. In a bullish scenario, it may signal a potential reversal of the downtrend. However, when it appears in a strong downtrend and is followed by a bearish confirmation, it can indicate a continuation of the bearish momentum. So the psychology behind this pattern is crucial. The longer upper wick shows that buyers initially pushed prices higher, we've discussed that, but sellers regained control and pushed the price back down by the close. So this struggle between buyers and sellers provides valuable insights into the market sentiment and potential future direction. So let's talk about trading strategies for the bearish inverted hammer. But before we get into that, let's hop on the charts and try to spot this candlestick, the bearish inverted hammer. So you can see this is exactly how it looks. See the circles, these are just the bearish inverted hammer. Remember to use them with context. This is a bearish trend, and we have been bearish, as you can see, and this was just a pullback. Let's look at the charts. This break of structures to the downside. I'm having a series of break of structures to the downside, and this you can see right here is a pullback into the zone. If you take your Fibonacci from that high, that swing high, to this swing low, you're gonna see that this aligns perfectly with the 61.8% Fibonacci level, which is the golden zone. And as you can see, we should be expecting bearish movements to continue the bearish trend. This is a continuation pattern or candlestick. The bearish inverted hammer is a continuation it's a continuation pattern, it's a continuation candlestick, and as you can see, this we have series of confirmations to enter the trend and join this trend and push prices lower to break structure right here. So can use the bearish inverted hammer. Let's look for another example. So this is another example, and you can see here we are bearish also, and this was just used to continue this trend all the way lower. And as you can see, just series of break of structure to the downside, and we using the bearish inverted hammer. Remember, this is the daily time frame, so it's more reliable than using it on the 5 minutes or on the 10 minutes or 15 minutes time frame. So I would suggest you try to spot the bearish inverted hammer on the daily time frame, as it has more weight than the lower time frames. So I think that's enough examples. Let's talk about how to use it in a trading strategy. How can you trade with this bearish inverted hammer? It's quite simple. It can be used as a precise entry point for short positions, particularly when it forms near key resistance levels or at the top of a range. So by waiting for this pattern to occur, you can join the existing downtrend with a well-defined entry and tighter stop loss. So as you can see in this first example, we are already in an established bearish trend. So price just hit the 61.8 Fibonacci level, and this is in line with this resistance level inside that zone, and you can see price reacting off of that with this rejection and giving us this bearish candle, confirming that yes, this zone is a valid zone. So we should be looking for entries, ways to enter this trend, to join in this bearish trend. So you can see the bearish inverted hammer forming here. When using this approach, consider the following. Ensure that the inverted hammer forms in the context of the bearish trend. We've established that. And look for the pattern to occur near a key resistance level or trend line, and we have established that also. And you should consider entering at the close of the next candle, closing below that bearish inverted hammer. So here we'll consider entering here at that close of the next candle. Stop loss placements should be above the high of the inverted hammer, and take profits should be on the next support level or favorable risk to reward ratio. You could also use a fixed risk to reward ratio like the 1:2, which is my favorite. So 1:2 risk to reward ratio, and you're out. Or you could just target the support level right here and ride the whole thing all to the end. So that is for the first example. For the second example, it's still quite the same thing, just that the next candle after the bearish inverted hammer was another bearish inverted hammer right there. So remember, it can be a bullish candle or a bearish candle. So the main thing is that it forms at the top or in major resistance levels. So you use it for continuations to continue a bearish trend. So you can see, following that, you could just wait for price to go below the bearish inverted hammer and close, which we can see right there, and you should be looking to take a short position at that close, and set your stop loss above the high of the bearish inverted hammer, and your take profits at a fixed risk to reward ratio. Okay, we've already discussed this. Or you could just set it at key support levels like this one. So I'm gonna look for the next example. So here we were bearish, and price just hit this level right here. Remember, there is a resistance zone right there for continuation of the bearish trend, and after we hit that level and had this reaction from that area, you can see price giving us this push to the downside, and we're just looking for ways to enter into this bearish trend and push prices lower to break structure right here, or target a series of support levels like this one also. So looking at that, we are looking for key candlestick patterns which we could use to enter our trades, and you can see the bearish inverted hammer forming right there. So you can just enter at the close below that bearish inverted hammer. Your stop losses are above the high of the bearish inverted hammer, and your take profit should be at key support levels like this, or a 1:2 risk to reward ratio. So that is how I would have entered this trade. This is another example, and you can see this is in line with a trend line. Perfect. So looking to enter this trade, you can just see after this bearish inverted hammer, you can look for the close below it, and this is the close below it. That's a very big bearish candle. I'm just gonna set our stop losses above the high and take profits at 1:2 risk to reward ratio, or you can set it at this support level right there and hold for the long term, and you can see price going all the way there. So that's how you'd have entered this trend to continue all the way to the downside. So it's about trading with additional market context, and regardless of the strategy you choose, it's essential to combine the bearish inverted hammer with other technical analysis tools and market context. Consider factors such as trend direction, support and resistance, levels and volume to strengthen your trading decisions. So alright traders, we've come to the end of today's video. If you found this video helpful, make sure to give it a thumbs up, subscribe to the channel and turn on the notification bell so you never miss out on future Forex trading insights. We'll see you in the next one. Thank you for watching.